Welcome to day 2 of the Invest in Turkey Forum 2021. I want to welcome everybody to this conference. It's the leading event for Turkish and international investors, lenders and developers coming together to discuss how to seize the best opportunities across project finance, infrastructure, power markets in Turkey. So, following on from yesterday, we've got a number of panels today who are covering areas that include energy deals. We're looking at renewable energy, and we're looking at hydrogen. We're looking at sustainability. So it's going to be another full day of interesting discussion, and obviously our specialists and experts will help you sort of better understand what the opportunities are on offer in Turkey. The areas that we're looking to develop here is based on Turkey's continued GDP growth, as even through COVID they've been one of the best performers in that respect. And one other positive for Turkey is the reorientation of supply chains away from Southeast Asia, where Turkey probably has a major role to play in that, particularly for European and UK producers. So we will be discussing areas that offer greater opportunity. The other big opportunity in Turkey is e-commerce. I mean, that's grown tremendously over the last 4 or 5 years. Obviously, COVID has helped move that along as well. But the capability and the success of e-commerce companies in Turkey has been quite phenomenal. We're also going to be talking about digital transition. We have Vodafone on the panel later in the day, and they will be discussing both sustainability and digital transition. So it's going to be a very full day. It's going to be very interesting. We've got some very high profile and experienced speakers. So I'm going to introduce our first speaker for the day. Murat Demir is a regional partner for NAZALI, the Tax and Legal International Partnership in Turkey, and he's going to take you through Turkish tax environment and incentives. So I'm going to hand over to Murat now, and I wish you all success and enjoy the day. Thank you.
Okay, thanks, Chris, and hello, everyone. My name is Murat. I've been working at NAZALI Tax and Legal as regional partner. I'm responsible for the West region of Turkey. This part is very important for the Turkish economy because it's a very industrialized area, and accordingly, it has a very strong income, a very rich region in terms of qualified people sources. As NAZALI, being one of the sponsors to this event, first of all, I would like to say you welcome again, and thanks to EEL, and Emine Hanım for this valuable forum. Actually, in last 1.5 years period, we have been going through very tough days. Fortunately, we have never had a world war experience and never been exposed to its devastating effects. However, we have been exposed to another catastrophe for almost 2 years, the COVID-19 pandemic. It is still affecting everything in our lives, including the actors in both the microeconomy and microeconomy. Since I'm also a tax expert, today I would like to talk about the general tax environment of Turkey, especially in terms of the international taxation. After that, relating to this event's subject, I'll give you some information about the current incentives granted by Turkey. I hope you're gonna see whether there are attractive incentives so that companies come into Turkey and make some investments. Next slide, please, Emine Hanım. Okay, the world's climate is not the only thing changing around us. So does international taxation. Let me start with international taxation matters and their effects on the tax environment of Turkey. There is a saying I really like: the tax brilliant structures or ideas provided 10 or 15 years ago are now being criticized on the ground of tax evasion. It's because of that the world is getting smaller, For multinational companies, however, countries and their tax authorities have no chance to see multinationals' whole operations in one place. They cannot detect from where multinationals prefer to derive a big part of their profit. Okay, multinationals have been benefiting from some tax-efficient corridors for decades. But what about the countries? Are they so innocent? Let me give you the answer immediately. No, they are not. Especially in the last 10 years, we have been observing that the countries are in a very serious competition to attract multinationals for themselves. For example, there are so many countries which decrease corporate tax for research and development activities. Some countries adopted very competitively corporate tax rates like 5%, only 5%. 40 years ago, corporate tax rates are above 40%, almost even 50%. Today, it is deemed very tax expensive if it is more than 20%. Remember, just before the COVID-19 pandemic, even very powerful countries were arguing to decrease their corporate tax rate in order to attract multinationals for themselves. They want to make them come back to their countries and make their country great again. Pandemic requires so many countries to increase corporate taxes, but this is temporary. We may see the same competition will continue right after the pandemic. So while countries have been intentionally providing lower tax rates in order to get attraction, and even they create tax efficient corridors, in the meantime, they have been trying to tax multinationals as much as possible. So in this game, neither countries nor multinationals are guilty or innocent. But it is certain that the international tax climate is changing as well. Due to this need, OECD has been advising the countries so that they can struggle against base erosion and profit sharing, which is called the BEPS Action Plan. Under the OECD umbrella, countries get together and construct such mechanisms to be able to push all those companies to declare all their activities and according to transfer profits without omitting any detail. So this requires also to leave fair profits at the different countries according to the functions of their operations conducted in that country. It is OECD's BEPS action plan, and it has been very active for a decade. These efforts are very important not only for Turkey, but also for the rest of the world, because if the BEPS plan is not successful, the tendency of the tax authorities in the whole world might shift to increasing the indirect taxes rather than corporate taxes. And this would seriously affect much more real persons rather than companies. So transfer pricing issues are very important for the tax authority. As you know, this is not a hot topic only in Turkey. It concerns many tax authorities and many companies all over the world. Turkey applies OECD's base erosion and profit sharing actions into its local legislation. I need to admit that it's being done a little bit slowly, but Turkey spent serious efforts to catch the deadline given by the OECD. As to this topic, Turkey adopted BEPS 13 action plan, CBCR reporting and master file requirement last year. Turkey has also adopted BEPS 15 action plan, which is also called multilateral instrument, into its local legislation. According to this action, more than 3,000 prevention of double taxation agreements signed between almost 200 countries are about to be changed very deeply. The last word for this topic, can we stay in the previous slide, Emine? I will tell you, okay, when you will change. The last word for this topic, I mean the international taxation matters and the Turkey efforts regarding this plans. We will see there will be serious change in the international taxation and almost every multinational, international, even national companies would need to check their structures in accordance with the new rules. One another important issue regarding the Turkish tax environment is the capability of using electronic tools. Believe me, the Turkish tax authority, Ministry of Treasury and Finance, uses and adopts electronic ways in the taxation very quickly and very effectively. I remember the electronic tax declaration started in 2004, and we have been witnessing so many other developments in the last 17 years. Now e-invoices, e-books, e-returns, e-tax office, e-payment, e-consignment document, and etc. are very routines of the daily environment of Turkey. Coming to inspection in Turkey, tax inspections in Turkey, what we have been observing, especially within 1 year period, is number of the tax inspection increase. Can we get back the previous slide again? I will tell you the next slide, okay? It's a very long slide, by the way. Without a doubt, again, the pandemic and its devastating effect on the economy is leading factor for this inspection issue. Moreover, as we see in other countries, it's increased the corporate tax rates for 2 years in Turkey temporarily, according to the amendment law. The corporate tax rate is increased 25% for this year and 23% for the next year. After 2 years, I mean in 2023, it will get back to 20% again. Let me inform you, the recent inspections are most related to transfer pricing legislation. In recent years, the tax authority pays attention to transfer pricing transactions more than ever. There are several reasons for that, sure. But to me, the most important reason for this issue is there are lots of foreign companies in Turkey, and according to at the end of the day, the profit needs to be transferred abroad. So the TP is very hot topic in the inspections. In addition to this, management fees, royalties, debt to shareholders can be questioned in the inspections. A tax amnesty law has come into force very recently, last week in Turkey. The reason behind the amnesty is again COVID-19 pandemic effects on the economy, and accordingly the tax revenues for the government. Through tax amnesty law, it's aimed to create extra tax revenue, increase the collection of state receivables, and decrease the work burden on the courts and tax authority by ending the controversial issues. Why this amnesty is so important? Because it has some effects on state receivables, tax inspections, and tax litigations. But to me, there are two important points in the amnesty. The first one is you're able to end your tax controversy with the tax authority by paying some of the tax principal and penalties depending on your status of your case. I mean, it changes upon your tax case status. For example, if the first degree decision is in favor of you, then you need to pay less amount of tax principal and tax losses. By this way, you're able to end your tax controversy with the tax authority. The second important point in the amnesty law, it provides taxpayers an amazing opportunity to close some previous year's transactions and recourse to the tax inspection. It is called tax base increase. Once you redeclare some part of your previous tax bases, the tax inspection is eliminated for those years legally. Besides these two important regulations, the tax amnesty law offers an opportunity to correct business recourse with some tax payments and provide an opportunity for revaluation of immovables and other economic assets subject to depreciation. The thing I said lastly, the revaluation of immovables is a kind of temporary solution for decreasing the inflation effects on the balance sheet. I can assure you that there are many details in the tax amnesty law, but I think this frame I just told is enough for now. It was recently announced that the tax procedure law will be updated. This could be important because there might be a new inflation accounting requirement. In the last 5 to 10 years, there has been serious inflation in Turkey, actually, and since it didn't happen very suddenly, the criteria which should initiate inflation accounting were not triggered. On the other hand, the last inflation accounting application was applied in 2005. From that date, around 16 years period, there hasn't been any mandatory inflation accounting application in Turkey. So companies' balance sheets do not reflect the current assets now. Furthermore, companies' capital has been weakening against this disruptive inflation effect. I believe that there will be also an amendment for inflation accounting, besides some temporary solution existing like in tax amnesty law. Yes, we can get the next slide. Yes, okay, thank you. In the current tax legislation of Turkey, there are so many attractive tax incentives. However, I will shortly mention 4 of them, which I believe make Turkey a very attractive country. In the first group, there are investment incentives, and then R&D, research and development, and design incentives are very important. Turkey provides a serious tax advantage to companies making cash capital increase. And the last one is tax exemptions for the companies and their personnel engaging in production activities in free trade zones. Let me give you a few details about these incentives. Next slide, Emine Hanım, please. Okay, this is the first investment I have mentioned. It is investment incentives. Through investment incentive certificate, it is possible to decrease the corporate income tax rate to 0%. It applies up to a certain amount of the investment made. It changes according to the type, amount, and the location of the investment. Not only low corporate tax rate, but also there are some other incentives relating to this investment incentive certificate. Social security premium of employees is supported by the government. VAT and custom duties exemption on the machinery of investment. Interest rate support by the government. VAT refund and even land allocation are possible under this incentive. If the investment amount is more than 500 million Turkish liras, then it can be even applied to a tailor-made incentive program. Of course, this program grants more attractive incentives to investors in comparison to ordinary investment incentive certificate. This incentive is very important because it is almost the most attractive one ever presented in Turkey by far. For the companies to invest first time in Turkey and companies currently having business in Turkey, both of them can benefit from this incentive. We have lots of clients have utilized this incentive for years. The key point is here, if you make your investment plan initially, you may decrease your corporate tax burden up to even 0% for many years. Next slide, please. Okay, in this slide, I will mention very shortly R&D incentive. There are also incentives relating to firms dealing with research and development and design activities. The most important 2 incentives under this. First, 100% corporate tax deduction is possible, and up to 95% income tax exemption is possible for the personnel who work in those centers. It could be benefited through either establishing startup in technoparks and establishing establishing R&D or design centers in the current plants. After research and development project is conducted, provided that a useful model or patent is acquired, there will be also a 50% corporate tax exemption over the related revenues to be generated over the project. Next slide, Emine Hanım, please. Yes, this one. It is very important incentive. It is called cash capital incentive. It's very interesting incentive because it's endless incentive. Whenever you make a cash increase in your capital, then you are entitled to take 50% of the annual interest of that money as a deduction in your corporate tax base. If the money is used in your investment activities, then the ratio is 75%. Let me give you a very quick example for your better understanding. Assume that you increase your capital in cash amounting to 10 million Turkish liras and the annual interest rate is 20%. Nowadays, it's very close to, by the way, 20%. This application provides you half of the interest, 1 million Turkish liras to deduct from your corporate tax base every following year, starting from now. So, as I said, it provides you an endless deduction. Furthermore, when it is combined with investment incentive and R&D incentives, as I explained in previous slides, it grants enormous advantages to the investors. Next, and I guess the last slide. My last golden incentive is free trade zones. Free trade zones provide full corporate tax exemption to companies, provided that dealing with manufacturing activities, not for the trade activities. These areas are designated special areas. They have their own special legislation, by the way. But as I said, it provides full corporate tax exemption. Moreover, it grants income tax exemption to salaries of employees in case 85% of the products produced in this area export to foreign countries. There are also VAT, custom, and stamp duty exemptions in the free trade zones transactions. It is, I think, very important exemption. Thanks for listening to me. I hope I made some tax issues a little bit clarified for you, and wish you a great event.
Well, thank you, Murat. I mean, yeah, very comprehensive and detailed. I'm sure it'll take probably some of the guests who are on the webinar, but yeah, I'm sure if they want to ask any further questions, they can direct them directly to you, and we can pick them up through Emine, who will, I'm sure, pass on any inquiries that require further detail. So thank you, Murat, and we're going to take a short break now, and we'll be returning in a few minutes. Thank you.
Thank you so much, Murat Bey.
You too. Bye bye.
You.
By the way, as you said, Chris, I'll be around here if there will be some questions regarding these complex issues. I'll be glad to answer all those questions.
Okay, good.
Thank you so much.
Bye.
Bye-bye. Thank you.